Consumer confidence takes a nosedive in February. The Conference Board's Consumer Confidence Index for February suffers its biggest drop in 3.5 years. Here to discuss that and more is Shana Orczyk Sissel of Banríon Capital Management. Shana, this was the third straight monthly decrease and was far more than economists had expected. Talk to us about the pessimism we're seeing and how that affects consumer behavior.
I'm surprised by the pessimism. I think that with the new administration, they were very clear on what they were planning on doing, and one of them was to be fiscally responsible. But there's been a lot of headlines related to cutting of certain programs and spending and what's going on in China. And there's a lot of uncertainty with the tariffs. And I think that's starting to weigh on people because they're not really sure how this plays out, economically speaking. And for that reason, I think that's why people are feeling uncomfortable in terms of their confidence in the economy today. But overall, there hasn't been a lot of things that have changed. And I would argue that some of the steps that are being taken, while certainly not being done in a way that's media friendly, is good for the economy and good for inflation. In fact, much of the spending cuts that are being, suggested would be good for inflation, as it would bring the fiscal spending and the fiscal budget more in line. And that's been a huge driver of inflation in the recent years.
Well, let me ask you this. U.S. Treasury Secretary Scott Bessent said today that the U.S. economy is more fragile under the surface than economic metrics would suggest. Do you agree with him? It sounds like perhaps you don't. And what metrics do you think he's looking at?
It's not that I disagree with him, but I will say that overall, the one thing that is a bit of a red flag is weakness in the consumer credit markets. So there's a huge discrepancy between high income earners and middle and low income earners in terms of the spending and who's kind of driving consumer spending right now. And it's mostly coming from the upper income brackets, while the lower brackets are starting to feel stress. And if you look at a lot of the different credit markets, whether it be auto loans or credit cards, we're seeing an uptick there. In fact, Jamie Dimon mentioned it in a recent interview that JP Morgan is seeing an increase in delinquencies in their credit card business. But he mentioned that he was not overly concerned, and this is the important part. It's back to normal levels. So we went through a period where credit and delinquencies were not elevated. They were below average. They were not near the historical average because of a lot of the stimulus that was in the economy. And now we're starting to see that there's some stress there, and that's more than likely what he sees. And then I also think that there's some concern that inflation is not as under control as people think. And there have definitely been signs of that recently.
Let's switch gears and talk about Nvidia, because Nvidia's earnings are tomorrow. How much is riding on that given the emergence of China's DeepSeek, and especially because Reuters has a report out today saying that DeepSeek is racing to get out its latest AI model by May?
I think that its importance in terms of their earnings is massive. And the memes that are out there about Nvidia being the entire economy being on the shoulders of Nvidia they're there for a reason. They resonate for a reason. It is somewhat the case that as that stock goes, so does the market. So it is cause for concern that there is a threat now. That's always been the biggest concern I had as an investor, is somebody coming in and being a threat to their market dominance that we didn't see coming. And DeepSeek definitely falls into that. Now, that said, DeepSeek is obviously an AI model. It has its own internal chips, but it doesn't necessarily mean that it's competing with NVIDIA for market share, and that most of those chips are not necessarily being sold to NVIDIA customers and would not be likely to be sold to NVIDIA customers at this time. In fact, I would argue that having a threat like DeepSeek create some sense of urgency for the legacy players to be able to compete at that level, which would require them to have newer and better and faster chips in order to support their models. We're definitely seeing increased demand. Microsoft and others have mentioned that they're increasing their spending. And there is some question if that's actually true in terms of Microsoft and the data centers that they need. But that said, what NVIDIA does becomes hugely more important for people to be able to compete with somebody like DeepSeek.